The tech market in the United States has collapsed in recent hours, also triggering a major crash in the benchmark index, the S&P 500. And of course, Bitcoin and the crypto ecosystem have suffered the same fate, with Bitcoin's price dropping by 9.18% since Thursday, August 14, a decline that has, without a doubt, spread across the entire crypto ecosystem. So what now? We're witnessing how this massive drop in crypto, driven by the fall of the Nasdaq and the depreciation of tech stocks, has shaken the entire crypto market. Not only Bitcoin, but also the altcoins have been severely affected. Now let's take a look at the market sentiment we're currently seeing in Bitcoin. You'll remember how in previous videos we said that market sentiment, which had been sitting at certain levels, hadn't yet reached a point of great euphoria. But notice how from that very moment, after the big crypto crash, market sentiment collapsed to new lows, showing that right now the entire market is absolutely terrified. This is a reflection of what retail investors are thinking. After experiencing the recent drop in Bitcoin, the average retail investor has turned completely catastrophic. And you already know the philosophy we practice at Crypto Insight. We are pure contrarians. And if the crowd is fearful, it should be easy to see what our positioning in the market will end up being. Here you're looking at the chart of Bitcoin's 30-day options delta. What we're doing here is comparing the demand and the price of put options, which are sales or protection, against call options, which are market bets or bullish positions. We are measuring that differential, the delta between calls and puts. Under normal conditions, the delta spread of call and put options ranges between plus 6% and minus 6%. Normally, we'd expect to see a middle ground moving through that area. But look at where Bitcoin's 30-day options delta is right now. We are sitting at a delta of 12. What does this mean? It means put options are in much higher demand or more expensive than calls. It means traders are paying more to protect themselves against downside moves. In other words, the options market is sending signals of very elevated fear, because having that delta differential at levels of 12 means traders want to shield themselves from what they expect to happen with the asset. In other words, they expect Bitcoin to crash. Remember, earlier we were looking at market sentiment sitting now at extremely low levels. People are very afraid, but this fear is also reflected in the options market. The herd is completely terrified. Everyone is expecting more downside. So now let's take a look at what's happening with the ETFs. Let's start with Bitcoin. What's the flow? Is money coming in or is money flowing out these days? For that, we need to scroll all the way down the list. And here we can see how starting on August 15th, outflows began in Bitcoin ETFs. This was something that repeated again on the 18th, 19th, and 20th. So we've had 4 consecutive days of outflows in the ETFs beginning on August 15th. Now, let's be clear. These are not billion-dollar outflows. If we take into account all the inflows we had before, it's obvious that ETFs are still positioned with a long-term bullish direction. Let's not lose sight of that. But the fact remains that for Bitcoin, we've had 4 straight days of outflows. And remember, ETFs are not only for institutions. This gets said a lot, but in my opinion, that's a completely wrong assumption. And now, if we analyze the dollar flows in Ethereum ETFs, we'll notice that since August 15th, we've also had 4 consecutive days of outflows. But once again, if we do the math, we realize that there is still a majority long exposure, focused on the medium and long term. That said, the facts are the facts. We've had 4 straight days of Ethereum outflows too, and it all started on the 15th. Basically, when people saw that first drop in Ethereum on the 15th, that's when the 4-day streak of outflows began both in Ethereum and Bitcoin ETFs. Honestly, the ETFs haven't been heading in the wrong direction, but this shouldn't be seen as if we're suddenly facing a massive trend that's just starting, as if institutional investors pulling out means the whole thing is going to collapse. Because, as you've just seen, they're still very much exposed on the long side in both Bitcoin and Ethereum ETFs. And let's not forget the deep fear running through the average retail investor, which we can also see reflected in the options market. Traders are willing to pay higher premiums for spot options, simply because they're honestly terrified. And now let's analyze the next piece of data. What you're seeing on screen right now is the annualized 6-month futures premium on Ethereum. So what exactly is the futures premium? It's the difference between the price of futures and the spot price, the price in the spot market. So if futures are trading higher than spot, that indicates optimism, because traders are expecting prices to rise. Since we're evaluating the 6-month premium, it makes total sense that if traders prefer to buy Ethereum futures, it's because they expect the underlying asset to appreciate. But be careful. If the futures premium trades lower, then it signals pessimism, because in that case, it would be better to simply invest directly in the spot market. Now, how do we analyze this chart? Well, if the premium is above 5%, the market interprets that as confidence and a bullish sentiment. That's why we can see that from May 26 up until today, the market has generally been very positive towards Ethereum. And honestly, I'm not surprised. Just look at how much Ethereum has risen since May 26. Here we mark May 26, and you can see how Ethereum has appreciated. So it makes total sense that the annualized futures futures premium for Ethereum has stayed above 5%. Now, what's interesting here? Well, if we were just talking about the catastrophic drop in Ethereum, Bitcoin, and the traditional markets, a truly dramatic collapse, what really stands out is that even with Ethereum's understandable decline, the annualized futures premium hasn't fallen below that 5% level. And that could mean two things. First, there's still positive expectation in the market. And second, we still might not have reached the bottom in crypto. We'll look at all of this later with the charts, and I'll share with you what we think is going to happen with Ethereum, with Bitcoin, and most importantly, with the altcoins. I'll explain it in a moment, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's keep talking about the Bitcoin and crypto crash. Here you can see in this recent drop in Bitcoin's price, the major collapse. Now, I want us to analyze how long positions in Bitcoin have been liquidated. It's really striking to see how during the drop, long positions were wiped out. Basically, we're in the classic situation where price gains strong momentum, plunges to its target, and in our view at Crypto Insight, this happens to flush out long positions before eventually starting a bullish path. I'm already showing you my cards here, but now let's see how this could play out. And if you're wondering why we're looking at liquidations right now, it's very simple. Before an institutional player makes a big move, in this case upward if they want to go long, first they need to shake out the retail traders so they don't enter well positioned. Once they've been shaken out, then the price can continue climbing. And why do they do this? They do it because they don't want retail traders who see profits in their accounts to sell their positions while the move is going up. Those sales would turn into market sell orders, and institutions would be forced to absorb that selling pressure to keep pushing higher. They want to avoid that problem. So before making the move, they clear them out. Here you're seeing a very good example. Bitcoin dropped aggressively on June 23rd. Notice how long positions were liquidated, and only then the upward move could begin. We see a dramatic fall, longs get wiped out, and then the move is possible. And right now, in this recent drop, longs are again being liquidated, which means another move could be coming. A move that Michael Saylor from Strategy is desperate to capture. Now, we're not going to dive into the details of how Strategy's Bitcoin treasury mechanism works because that's a long and complex topic. But what I can tell you is that under the current criteria they operate with and that their investors expect to be followed strictly, Saylor realized he actually couldn't buy Bitcoin right now, no matter how much he wanted to. So what did he do? Just 3 days ago, he announced a complete change to the mechanism, conveniently adjusting it so that now he'd be allowed to buy Bitcoin. Because as I said, Michael Saylor is desperate to take advantage of this Bitcoin and crypto drop. And this whole decline in Bitcoin, Ethereum, and crypto that we've been seeing lately is happening at almost perfect timing, right as the Jackson Hole Symposium is taking place, running from Thursday, August 21st through Saturday, August 23rd. At this meeting, the world's main central banks gather to decide where the economy should be headed in the immediate short, medium, and long term. That's why financial markets are so volatile right now. Maybe they're already pricing in a worse scenario, one that looks more than likely. It might feel like I've taken a while to get to the chart, but everything I've explained so far seemed essential for you to understand. At this point in the video, I think it's obvious that here at Crypto Insight, we remain positive and bullish on the crypto market because right now the market is living through excessive fear. At a time when companies like Strategy are planning Bitcoin purchases, let's say almost by force, honestly, we don't really care what Strategy does. We also don't care about all these millionaire whales shifting some of their Bitcoin into Ethereum, as if they were expecting an alt season, even though all of this is happening right now. That doesn't matter either, although of course it adds to a positive narrative. But to be honest, I don't care. What I value, and to sum up this whole video, is that this drop could be discounting the worst possible scenario coming out of the Jackson Hole meetings. And let's keep in mind that this decline in Bitcoin, Ethereum, and crypto overall is happening alongside a lot of fear. Fear we see in sentiment, fear we see in the options market, and fear reflected in the futures premium. And since here at Crypto Insight, we are completely contrarians, always going against the big crowds that are wrong most of the time, this makes us positive on Bitcoin
Bitcoin and crypto. That said, I want to share something. The video could have ended right here and it would have been perfect. But let me tell you this. Does it really make sense that Bitcoin and crypto could drop a little further? It does. In Bitcoin, whether it's to generate a trap, to test the base of a macro channel, or to create a fake breakout of that channel, they might try to inject even more fear, maybe connected to whatever comes out of Jackson Hole. But even so, our philosophy and outlook, despite these drops, would remain optimistic. The same goes for Ethereum. I wouldn't be surprised if we saw an attempt at a bounce that ends up failing. In other words, I wouldn't be surprised if the markets fall a bit more. Even then, we'd still remain optimistic. And let me tell you something. Here at Crypto Insight, we are currently 100% exposed to crypto. My plan of action over the next few hours, today and tomorrow, will be to evaluate whether I reduce some exposure, so we're not entirely in crypto, or whether I maintain it. Because really, our job is to assess how likely it is that before the markets go up, which we are convinced they will, they might scare us one more time before taking off. That will be our big obsession, evaluating if this is going to happen so we can decide whether or not to reduce long exposure in Bitcoin in the coming hours and days. And of course, in Crypto Insight Premium, we'll continue covering all of this, since right now we're scanning a very broad list of altcoins to find long-term buying opportunities. See you next time.